Hey guys, Jack here. Stick around after today's episode to hear how new clients can save 50% on AgYield's full suite of consulting and technology for 2025. This exclusive offer is available now until April 1st. Don't miss out. Terms and conditions apply. Check out the video description to learn more.
Good morning, everybody. It's Thursday, March 6th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here at May corn up a quarter at 456. May soybeans were up 5 3/4 at 1017.5, and May Chicago wheat was up a quarter at 548.5. This morning we had an export sales announcement of 20,000 metric tons of bean oil to unknown destinations, and that was for 24-25. Also out this morning, weekly export sales. Solid week for corn, 909,100. That was the upper end of the range there. For old crop, 52,000 for new crop. Soybeans kind of lower end of the range, 352,900 for old crop, 54,900 for new crop, which was a tad above what they were looking for. Wheat sales, 338,700, middle of the road there for old crop, 77,000. A little better than expected on the new crop. Meal sales, nothing really spectacular, 236,600, kind of right in the middle. And another good solid week for oil, 54,800. Upper end of the range was looking for 45. This morning had some economic data. 172,017 layoffs for February, highest level since July 2020. Stock market reacted poorly, got down about 480 to 500 there early. It's come back a little bit, down 383. Also, the ECB cut their benchmark rate by a quarter. So that's got some of the currency markets going a little wild here this morning. So we've talked about it last couple of days, guys. We kind of do a refresh each day just to see where we're at in terms of everything that's going on. Supposedly, it's said that Trump is going to be visiting with the president of Mexico here today. So we're going to be, all eyes on headlines or anything that potentially comes out of that meeting with regard to tariffs. I know that they've talked yesterday and announced that some of the automotive tariffs would be delayed a month. And Secretary Ryland made more comments yesterday afternoon regarding potential waivers for potash and fertilizer and some of these key components for us here in the States to potentially help our farmers. So it's ever moving, always evolving here. Dustin, maybe give us a few thoughts here this morning, and then we'll certainly kick it around the room.
Yeah, I mean, it's not very clear, obviously, what's going to happen. I think that's the anxiety that we're seeing in some of these markets, like equities. Crude oil is trading like we're heading into maybe a little bit of a downturn as well. How much of that is bleeding over into some of this weakness that we're seeing in products like corn is a question. That could be getting a very large net long spec position back out. That might be what we're feeling right now, why it's being led by old crop. A lot of unknowns that we're going to figure out here in the next 30 days, I think. One thing I'd say is interesting, though, with these currency moves and this big break in the dollar is the Brazilian real has found like a really good support in the last 24 hours. I don't think that seems to be reflected in the price. Wouldn't be surprised to see things turn a little higher just from that today.
Oh, very good. Justin, what I know we're just trying to read through the headlines and see what this means, but I guess sort of all eyes on Mexico. We've got a pretty big book on that hasn't necessarily shipped, and I know there's rumblings just in what that means if they don't take it or if we start seeing cancellations. I didn't dig deep into the sales this morning, but it doesn't appear that it was a canceling program here today.
No, I mean, certainly our markets are tied to, the same players that are in equities are also in commodities, and, kind of definitely a risk off mentality right now to kind of see, where everything kind of ends up. We're whipsawing around in the equities and the currencies and interest rates and, everything. So there's trillions of dollars that are just flying around here. And like I said, the same players are in our markets too. So when they hit the sell button or get out of something, right? They're very big compared to our markets. So you're gonna have really big moves and a lot of volatility. I think that's going to continue until we get some more clarity here. Not to mention we're going into March 31st report, planting season, all those kinds of things. At the same time, we've had crop insurance set, so there's a ton of variables at play here. A lot of people making different decisions for different reasons. So I think that makes sense, and that's kind of what's going on here. As far as exports, I kind of believe that this big liquidation, we're starting to see. I've talked about soybean oil a lot. We're selling tremendous amounts of soybean oil every day. We're liquidating right into really good demand. Corn today, Mexico's bought 250,000 in the weekly numbers here, so they're still buying. It's still the cheapest corn that there is, and soybean oil is the cheapest oil on the market. So I think when the funds liquidate and you the idea is that you try to find where there's just good fundamental buying. I think we're finding it in some of these commodities. I talked about it yesterday. I think you're going to see some commodities that just stop going down because they're at really big value areas and commercials and end users are willing to buy because they have a good margin. And others, might fail. To Dustin's point, the real finding good support. We'll see if beans start finding some background here as well. China bought 205,000 beans this week, with South America quickly becoming the cheapest. So maybe the currency moves, in the real start maybe flipping the tune a little bit on South America always being the cheapest. Dustin's talked about this for a year now, but it's the currency move. I mean, the cheap real has been such a headwind for us, especially with soybeans, just because it's such a big, exports are such a big portion of our demand. If it were to go the other way, I think you could be in an interesting position with beans, especially if you lose a bunch of acres where, there's a ton of hedges on our US backed exchange, and they're always planning on the currency bailing them out, getting cheaper and making that money. So if it were to go the other way, it's big, what if asterisk next to that, but you could put some, have some really out of position hedges too. So it can go both ways when you're, the currency has such a big impact on the price that you're receiving.
So so kind of a takeaway, Justin, is the market's functioning very well for how it should at this point in terms of, like you said, finding demand and doing its job.
Yeah, I mean, if you're going to have we love the funds when they're on our side, and buying it when they decide to flip and sell it, right? Then you have to have a fundamental or a real buyer come in and take it. So, where it stops is where you start to see that demand really pick up. So like I said, soybean oil, I think it's pretty obvious. We've found that point. That doesn't mean it can't go a lot lower, but we're using it, and it was already kind of a tight, relatively tight market for how much we're crushing and how much we're producing. We're using a lot of it. The recent number that came out, soybean oil stocks went up. I think biodiesel, demand kind of slowed there for a bit, and we're replacing it with export demand. So, yeah, I mean, that's really the only way to do it, right? We were still selling. The thing was, we were still selling old crop corn on the way up. It never really slowed, and now we just broke it 60 or 70 cents. So I think it's going to be interesting once whatever liquidation has to happen here, to see how these markets perform. Whatever that time frame is.
Yeah. What's your take on ethanol stocks, Justin? They remain in kind of historically high for last week as we got that data. What's your take on that?
Yeah, I mean, I think that's certainly a headwind. We've been same thing when we've been just using, a lot of it, right? We've been crushing a lot of corn for ethanol. Stocks have gone up. Obviously a big concern there is our biggest export market is Canada, for ethanol. And then with crude oil breaking like it has been, certainly, that's been a headwind for corn as well. So it's definitely in the negative column, I'd say. I don't think there's a way to say it's positive. I think that you would expect that, ethanol grind comes down. But, the feedstock just went down as well, 70 cents. Right. So, I mean, maybe that picks back up. I don't know the answer to that. We export a ton in Canada. I think that the whole tricky part of this is that we're so intertwined with Mexico and Canada that, I don't know that either country can afford not to take these products.
Right.
I mean, you hope that we just, obviously we hope that we get a good deal and figure something out because, they're two obviously huge strategic partners. The negotiating part is that, it's 2.5% of our GDP, is based on trade with those two countries versus each of them. It's, closer to 40 to 50%. So it's certainly going to be a harder thing for them. So you hope that we can just negotiate something and move on, but.
Very good. Ben, what's on your mind this morning?
I think Jason summed it up this morning, and you guys definitely touched on that. He said there's a lot of money flying around right now. And looking at, just longer term stuff, I think there's a potential that we're starting to see maybe a disposition change for some of the managed money where there's a desire to maybe be long beans against short anything else for a little while for the things that Justin mentioned. Which it's been kind of the whipping post here for a while. So I think that's worth watching. And if we're down here and we start doing more business and we really can't get off our keister, I think it could wind up being at some point it'll come home to roost, June, July, something like that, because we're not burdensome with corn supplies. And if we take that lower, I think it makes those last 3 months of the year before we see new crop could be pretty fun. So,
just like Trump said,
it's gonna be
fun.
fun.
We're saying it's gonna be fun.
Have fun.
I mean, I know we're all waiting on it, so
Yeah.
it just it just depends what your version of fun is. Right? It could be.
Well, and that's something that he's talking about, being patient. And the thing that concerns me the most about being patient is we're entering our window, which gives us typically some of our better opportunities of the year to get some grain marketed. So I hope that his being patient does not kind of flatline or deaden our markets until we figure this out. And then all of a sudden we realize that we have a really big crop. In my big head, small brain, I think that's our worst case scenario.
Yeah, timing is going to be important for sure. we got a couple of minutes here. Ryland, welcome back. Back-to-back strong days in cattle, and hogs finally broke that 10-day losing streak. So what's on your mind?
Yeah, no, it has been whipping around. I mean, obviously, the headlines are kind of the big driver past couple of days. Everybody's trying to figure out what's going on with the tariff situation. And yeah, some of the comments yesterday that some tariffs were going to get rolled back. There's some negotiation on others. So you got a little bit of optimism, but generally speaking, it doesn't feel like we're out of the woods as far as the market expecting more headlines today. So it's been a big recovery in cattle, but at this point we saw cash trade 195, 197. So it's steady, but still too lower in some cases for last week. So we're still waiting for the north to pick up, see how that goes. But again, the beef was lower. So new lows in choice, 313.5 down 133, select to 302. I mean, it just doesn't feel like we're in that really kind of great demand time frame. Plus you had some really bad weather hit, and just overall slaughters have been really weak in both places for cattle and hogs. So I think really we're just going to see how the north shapes up. Would expect kills to start to pick up next week. So I think just overall you got a little bit of a negative sense kind of coming back to the market here, even after this nice little recovery bounce. So we'll see how that kind of shapes up on that end. And same thing in the hog market. You had pretty decent cash news. You had cash at 90.28 up 107. Bellies down $2 though. The carcass down 129. So once again, the products are still a little bit weak. So I think right now the risk off is still kind of there, We have managed money that's still expected to be heavily long in the livestock sector, and that's a big risk if we really do see a lot more headlines that could impact demand. So I think it's something to be really cautious about. The feeder market is obviously seeing these tariffs as a lot more on the friendly side, but I just don't think we're out of the woods yet. If those tariffs don't go on, what happens? So it could go the other way. So not to be a negative Nancy or a Debbie Downer, but just kind of felt like we're losing some of the steam here this morning.
Very good. Appreciate the update. Just coming into the open here. May corn up $0.0125, 457 is the last. May soybeans are up 7.5, 7.75 now at 10.19. And May Chicago wheat unchanged, 548.5 is the last trade there. Tomorrow is Friday. Be sure to tune in. Brian will be back with Fun Fact Friday. Always a fun way to go into the weekend there. Also, we've talked about it ad nauseum. Until April 1st, we got a real special deal going on for new clients to AgYield. So certainly if you got any questions on some of these crop insurance decisions that we've talked about, how that fits in and integrates with your marketing, we'd love to visit with you. So be sure to reach out and give us a call. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. Keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments there, guys. It was a good show. Hope everybody has a great day, and we'll look forward to talking to you again tomorrow.
At AgYield, we know that farmers are constantly confronted by new challenges, and 2025 is no exception. Markets are volatile, margins are shrinking, and lender confidence is in free fall. Farmers need industry support now more than ever, which is why we are offering something truly unprecedented. From now until April 1st, new AgYield clients can access our full suite of consulting services and cutting-edge technology at 50% off. This is more than a promotion. It's our way of extending a hand of support to farmers when they need it most. From precision grain marketing to innovative risk management strategies, we're committed to protecting your farm's profitability and building a stronger, more sustainable future. And together, we can weather the storm ahead. Visit us today at agyield.com or call 855-266-6241 to get started. Terms and conditions apply. Check out the video description to learn more.